Hello everybody, this is Bud Fox with Ichimoku Trade, and welcome to our monthly newsletter. I'm going to be doing IMTF indicator with trading strategies and how I use the IMTF indicator. This month I'm going to be going and looking back at some value opportunities that we talked about months ago. So you can go back to our old videos and you'll see there are specific stocks that we'll talk about as value trades, and we'll go into one-day trade. Before we do anything, we've got to give a disclaimer. Everything that we are doing are for educational purposes only. If you want to engage in trading, I would suggest contacting your financial advisor. Again, all the circumstances that we are going into today are for the purposes of trading education only. We are broker neutral, and I'll be using TradeStation charts. Okay. First thing that we are going to look at, Gilead Sciences. This is one that we talked about a bunch of times a while ago. We were talking about it as a value trade. I think initially we had said, how long ago was this? Well, we got a bottoming here in June, and we started to get our row of crosses, although I think we got into it before this bottoming. I think we were in like around here, in like, I think in the 66s. We wound up breaking lower, and once again, you have a wave of crosses down here, and what you're looking for again is you have to decide for yourself why this is a value stock. We determine by our own metrics, and then we start looking for the crosses. So it's not just blatantly looking for clusters of crosses. There's an additional reason to it, and then you're looking for the reversal. So here we had the cluster of crosses, and then right here on this day you broke out with above average volume, 13 million. Again, we go back 6, 8, 10, 9, 8, 7, 7, 6. So we broke out, and the crosses moved up. Very important, the crosses move up. Came in here, and on this day, we tested the crosses, and we continued to go higher. Now, once you move up, people are going to say, well, over here, you had crosses above. That's not really what we're focusing on when we're using the crosses. What we're focusing on is that reversal, where you get the cluster of crosses, and then the stock reverses, or the currency reverses, or whatever it is. And then once it reverses, then we can adjust our risk however we like. As you can see here, this trade mostly has held the Cajun Sin on the daily, and it's still holding it. So we kind of tested it on Thursday and Friday because the COO resigned, but it held. So this could just be another pullback before it goes and breaks higher. But again, the point is when you're picking something that you think is of value, obviously it's not going to be favorable in the charts. So we use that IMTF indicator. We look for the cluster of crosses around the same price, and we look for it to break. And that is an indicator to get in. Your risk is always defined, because if it breaks back below those crosses, then you know to get out. Another value stock that we're going to look at, let's see. Again, these are all ones that we have spoken about in our prior videos. So American Axle and Manufacturing, we had discussed this being potential value, and that the knock on it was that they were an auto manufacturer, gas cars, and obviously gas is out, batteries are in, so people don't think that they're going to have a business in the future. But the key here, so crosses are above price, comes down, it makes a rebound, it comes up through the crosses, and is finally trading above the crosses. The thing that I like about this is that it pulled back to a cluster of crosses and then took off. So again, we decided that we liked this stock on a value basis at these prices, so we're just looking for the reversal, and we're just going to play it off that. Again, why? I think our upside is probably at least a 3, and our downside to a 1. And how do we get that 1? Well, we'll say, if it breaks through these crosses, it's probably a 40-50 cent risk. And already, talking about $15, it went to 18, so that's a 6-to-1. And that's the type of things that we're looking to do. One more that we were looking at was Buckle. Clothing retailer, everybody hates these. But, you can see here it's trading in a range where it's, not only is it under the crosses, it's under the cloud. Finally breaks down, consolidates, then starts with the cluster here around 1450. You go right here, breaks out on volume. Obviously, you see 200, 500, 200, 400, 1.1 million. So breaks out on volume, goes up. We've got dots moving up. Not many crosses yet. You got one cross here. Maybe we'll get a pullback to the SKB here, and then hopefully a go. But same type of scenario. We pick what we think is a value play, looking for a bottom, waiting for it to trade above a cluster of crosses and consolidation, and then we can get in, and our risk is defined. And again, if you were going to get in on this day, midday, 1630, now this would have been a bigger stop, I guess. So this probably would have carried more risk. Let's go to, this was a stock that I was trading. This was more of a day trade. Let me see if I can raise this a little bit. So this gap down over here, consolidation. Okay, these are types of plays that I love. I love these stocks that gap down. They consolidate for months. You get these clusters of crosses, and then here they break up on volume. So you can see that this thing was going, looks like maybe 1 million a day. And then we have a 15 million share day, gaps up. You get a new cluster of crosses now that is holding. So it keeps touching it and touching it and touching it. This cluster of crosses here, or this wall of crosses, I'll call it, and then just continues to go, breaks out of the cloud. This kind of we're still waiting on. If you would have gotten in, maybe say at 114, 115, you had plenty of opportunities after the breakup to get in that based on the crosses. And at this point, you're kind of hoping that we hold this SKB and we break up. That would be the idea of this play. Is there anything else that we can go through? There's a lot of different scenarios here at Calabasas. We'll look at that. This is a good day trade here. You got the volume break. Actually, did you even get it? Yeah, you got the volume break here. 750,000, 70,000, 40,000, 60,000. So this was like a 7 times volume break from this whole cluster of crosses here. And first day break up, and this thing has just gone north ever since. And it's still, if you look at this, you can see crosses move up, hold, crosses move up, hold, crosses move up, hold. Now, that usually doesn't happen. Most of the trades that we get into, once you have that break, you'll get crosses going above and below the price. This is actually super strong that it's still holding these crosses. But once again, the whole idea is you have a consolidation, sell off, consolidation, looking for the reversal, you get the spike, and it's off to the races. So how do you find these types of scenarios? Well, you can go to our scanner on www.ichimukutrade.com. You can get a 30-day free trial, and you can scan for stocks, currencies, whatever you want to, that are sitting or close to a cross. So you can get that list, you can go look at them, make a decision for yourself. Maybe you use something else to determine. You can always go to alerttrades.com, see how seasonally these stocks are going. So if you have something that has crosses like this that shows up on your scanner, and then you can go to alert trades to the seasonality and see, hey, maybe this thing could be consolidating. Maybe next month this thing normally goes 90%, in the month of October. Well, maybe you look for, wait for it and look for a breakout that month. So there's a lot of different ways that you can use these things. If you have any questions, you want us to do something else, please let us know. You can reach us at info at ichimukutrade.com. Otherwise, this is Bud Fox. Have a great month trading.